Hello everyone, welcome again. We will continue with corporation tax. Now we will look at the remaining stuff of our notes. So I will just share the screen with you so that we can continue with corporation tax of ACCA F6 taxation. On page 58 of your notes, we've done the page 57, we are on the page 58, where it says self-assessment. Now you already know the difference between the tax return and the tax payment. So tax return basically means a record, so where you will say that this is my source of income, this is also my source of income, that is my source of income, right? And then you will say I will be paying tax at the rate of this percentage, so the total tax liability will also be given. So basically it is a form which you will be filling, and then you will submit it to HMRC either electronically on the computer or by post, so whichever you prefer. So that is called tax return. So it is not actually a payment, it is just a submission of the record, submission of the file which you submit to HMRC, which gives the details of everything you have been earning during the year and how much tax liability you have to pay. So as it says on the screen, returns. The return is due for filing on or before 12 months after the end of accounting period to which return relates. Failure to do so on time will result in a penalties as follows. So if you have submitted your return late, there are a few penalties as you can see on the screen. So if you are up to 3 months late in submission of the VAT return, and if it is first time or the second time, then the penalty is £100. However, if it is third and subsequent consecutive failure, then the penalty is 5 times higher, which is £500. Right now it says first and second consecutive failures. It means that you have you failed to submit the return on time for the first time, then again second time consecutively, so it will be first and second consecutive failure, and likewise for the third and subsequent consecutive failures it is 5 times higher, the penalty. Then if it is more than 3 months and up to 6 months, it is £200 for the first and second consecutive failure, and 5 times higher if it is third and a subsequent consecutive failure. And if it is more than 6 months but up to 12 months, then £200 plus 10% of tax, and 1,000 plus 10% of tax again for third and consecutive failure, and likewise it increases with the more late you are, it will increase. Now if you are a company, then you must keep your records for up to 6 years, and then it says payment of corporation tax. Now if you are a large company, how will we decide if you are a large company? If your turnover is 1.5 million, then you are a large company. Now that 1.5 million will be divided by number of subsidiaries. If you have any 51% subsidiaries, that limit will be divided by that. So if you are one company, then you have one subsidiary as well, then 1.5 million will be divided by 2, then, which means that if you exceed £750,000, then you are a large company, right? And large companies are required to pay tax at the rate of 20%, as we know. Now large companies are required to pay corporation tax in installments. So if you're a large company, then you can pay a corporation tax by installments. The amount of each installment is calculated as follows: CT over N multiplied by 3. Now CT means estimated corporation tax liability, and N means number of months. Large company is not required to pay by installment if it is the first year, unless its profit exceed 10 million. Right? So if it is first year, then you are not required to pay by installment unless your profit exceed 10 million. Interest will be paid if you have been late. So interest is paid the company or HMRC on over underpaid installments, and you know that official rate of interest, the HMRC will charge official rate of interest, which is 3%. However, if you have overpaid, then the HMRC will pay you 0.5% back. Now this official rate of interest 3% will be given to you in the exam, and for late payments, for underpayments and late payment, when it says official rate of interest, it means 3%, and 3% in excuse me, in all of the F6 chapters. Right? Now if you're a large company and your accounting period is 12 months, then how many installments and when you have to pay installments? First installment, which you will have to pay on 14th of 7th month in the accounting period. Now you will make your accounting period, and if your accounting period is 12 months long, then the first payment will be on the 14th of the 7th month in the accounting period. So if you've started trading on 1st of January, then 7th month will be the July one. So 14th of July you will make first payment. Second payment will be made on the 14th of the 10th month. Third payment 14th of the first month after the accounting period. Likewise, third payment, and the fourth payment on the 14th of the fourth month after the accounting period. Next, it's very, very easy for, if it is a large company and accounting period is 12 months long. However, if it is less than 12 months, long, then it is a little complicated. Now, if you're a large company and your accounting period is less than 12 months long, then you are paying by installment because you are a large company. Then how much installment you have to pay and how much you have to pay, we know that, but how many you have to pay, let's see. You will have to pay first installment, which will be 14th of the 7th month from the start of the accounting period. Now it might look exactly the same like in more than 12 months one. However, what you have to do here is you will have to make first installment. So you will calculate the first installment, which will be the 7th month after the 7th month in the accounting period. Right? So it will be 7th month in the accounting period. Now after calculating the first installment, then go back and calculate the last installment or final installment. Right? Now what does the final installment says? As you can see on your screen, 14th of 4th month after the accounting period. So whatever the accounting period is for, 14th of 4th month after the accounting period, the last installment, final installment will be paid. Now after doing so, then come back to calculate the subsequent installment, be it only 3 installment or it could be 4 installments as well. So subsequent installment, it says 14th of the month, which is after 3 months interval of the previous installment. So if you've made first payment on 14th of July, then the next payment is going to be 3 months after that, right? So it is 10th month basically. If you have a 10 months long accounting period or more than that. Now if you're a small or medium sized entity, then the payment date is 9 months and 1 day after the accounting period. If you are 12 months accounting period or less than that, in both cases. Then it says compliance check discovery assessment will be exactly the same as we have seen earlier in income tax section. And then it says appeals. The company can appeal to HMRC. HMRC will allocate a case worker. A case officer will conduct an internal review and give his decision within 45 days. If company wishes, it can appeal to a tax tribunal, as we have seen earlier. However, appeal to the tax tribunal is expensive as compared to the internal review by HMRC. So in most cases, if you're a small company, you won't go for tax tribunal because it is expensive. Right? Right, then after that it says trading losses. So if your company is incurring some losses, how to deal with them. The first one is that trading loss carry forward, and we will assume that current year is 2007, so you have incurred a loss. Now if it is a carry forward loss, you can carry forward the loss to set off against future profits as long as the loss is not relieved. In the notes it says trading loss not relieved in the current year can be carried forward to set off against first available trading profits of the future year, and it can be relieved for as many years as we want until the loss is relieved. Qualifying donations will be wasted, so we'll try not to waste it, or we'll try to least waste it. So whenever we are setting off the loss, chances are that the qualifying donations will be wasted in current year. We cannot just leave it and set off against the future year profits. We will have to leave it. We will have to waste it. All right. So in our 2017 was our current tax year, current accounting year. Then there was interest income, property income, and capital gains, and there were qualifying donations as well. And after setting off the loss in our current year, if there is any loss left, then we will carry it forward for as many years as we want until the whole loss is relieved. Right? And on the next page, it says trading loss against a total income current year and carry back relief. Now, the previous one was that we can carry forward to set off against the trading profit of the future year, whereas this one says you can set off against total income, whichever income we want. So if you have a, if we will again assume that our current year is 2007, so if you have a loss here, you can set off the loss against total income of current year and total income of previous year. Now total income means every income, capital income, property income, and whichever. Trading losses can be set off against total income before gifted donations of the current year if the company wishes. It can further carry back its trading losses, if any, against total income of the previous 12 months. Any trading loss not relieved in current year and previous year can be carried forward to set off against future profits. The claim for the loss relief should be made within 2 years from the accounting date in which it was occurred. So what you can do is you can set off against current period, then previous year, and if there is any still remain, then we can carry it forward for the future years in the same way like we did for our income trading losses for individuals. Just beneath that it says a terminal loss. Now terminal loss again is the loss of the last 12 months of the trade. However, treatment is a little easier here. So it says if the trade ceases, then the trading loss of the last 12 months of the trade can be carried back to set off against a total income of the previous 36 months on a LIFO basis. Qualifying donation not relieved will be wasted. So qualifying donation will always be wasted. Right? Right, then let's look at a question now. If we on question number was 180, I think. Let me see. Yeah, Volatile Limited, and it was examined in 2009. Now it is a 10-mark question again, and it is about the losses which we have just seen. So it is about the losses. So V Limited commenced trading on 1st of July 2002. The company's results for its first 5 period of trade are as follows. So period ended 31st of December 2002, then 2012, 13, 14, and then period ended 30 September 2015, and then year ended September 2016, which means that it looks like that they have changed the year end in 2015. Right, then it says a trading profit is given, and in couple of years it is a profit, and couple of years it is a loss. So we'll have to set off the losses. Then the property business profits are given, chargeable gains and chargeable losses are given, qualifying donations are also given. Now it says state the factor that will influence a company's choice of loss relief claim. Now whenever we are thinking about relieving the loss, we will have to think about few things. Now one thing is that, which we have seen in our income tax as well, which are for individual trading losses. I told you that earlier loss is better. So if you relieve the loss early, it is better, because future is uncertain. We are not sure about future, whether we will have profits in the future or not. So it's better to relieve now than tomorrow, right? So it's so obvious. Second thing, in individuals trading losses was that least personal allowance should be reduced, whereas in companies there is no personal allowance, there is gift aid donations. So our preference will be that we should waste least amount of gift aid donations, so that we can use them against the profit, because they will reduce the profit anyway. So we'll have to think about it, that we should waste least amount of gift aid donations. Right, and in the B requirement, which is worth 8 marks, it says assuming that Volatile Limited claims relief for its trading losses as early as possible, calculate the company's taxable total profits for the 6 months period ended on 31st of December 2012, each of the years 31st of December 2013, 14, and 9 months on 30th of September 2015. Your answer should include clearly identifying the amount of any unrelieved trade losses as at 30th of September 2016. Alright, so basically it is asking us to do till 2015. Right? So what we have, if we look at the first period, which is 31st of December 2012, there is no loss in this year. Let's go back, let's go to the next year, which is 2013. Now in 2013 it is a loss, 73,800 is a loss, right? 73,800 is a loss. Now how many options he has got? Now this 73,800, first thing is that he can set off against current period's total income. So does he have any current year's total income? He has got some chargeable gains. No, he's got some property business profits, £6,600. So he can reduce the profits of the property business with the loss. So he can set off the loss first against £6,600 of the property business income, property business profits, right? So 73,800 less 6,600. Now that is the loss which is still remaining. Second preference is that I should set off against the previous year, right? Because we have some profits in the previous year, and the good news is that in the previous year we can set off against the total profits, right? So total income. So in the previous year we have got £44,000 of trading profits, 9,400 property business profit, 5,100 chargeable gain, which means that we have got lots of things in the previous year, and we can reduce the previous year's profits to zero, so that we will have to pay no tax in the previous year. However, previous year and the current year, gift aid donations will be wasted in both years, right? So 73,800. So first loss is current year, which is 6,600, which we will reduce for current year's profit. Then we will set off the remaining loss against previous year, and if anything is left after that, then we will carry it forward to set off against future year profits, and our future year will be 2014. Now whatever the remaining loss will be, we will set off against the 2015, right? So in 2015, if you see, we've got 95,200 profit, 6,500 chargeable property business profit, and 2,000 is chargeable gains. Then we've got some qualifying donations as well, right? So whatever the remaining loss was, we will set off against this year, and on the remaining amount we will have to pay capital, we will have to pay corporation tax. Right, then after that, if we look at the next one, which is period ended 30 September 2015, we've got some profits of 78,700, and we've got some chargeable gains as well, right? Now because we have got some profits, but if we look at the next year, which is 2016, we got huge losses of 186,800, which means them losses can be set off against the previous years, because in that 2016 we did not have any profits at all, so we can set off against the previous years against total income. So previous year, first we will set off against the trading profit, then we have option to set off against the chargeable gains, and then after setting off against the previous year, which is 30 September, whatever anything is left, that is still unrelieved excuse me, and we can carry it forward for the future year. But there is one interesting point here, if you might have noted now, if you might have pointed out. Now this 2015 one, 30 September 2015, it is period ended. Now this period ended is 9 months long, which means that we can set off the 2016 profit 9 months against this much, against 2015, and the remaining 3 months from 2014. So we can reduce the 2014 profit as well with this loss, which is in 2016. All right. So we have we can set off not only against 2015 and also against 2014. All right. So whatever the remaining amount will be, that will be the amount for which we will have to pay tax. I will just show you the answer to this one as well, so that you can understand this concept as well. Question number 180. Here you go, as you can see on your screen. Let me show you question number 1 as well. Let's see what did he say about the answers. Yep. Choice of loss relief. First, it says how quickly relief will be obtained. So the earlier is the better. Then it says the extent to which the qualifying donations might be lost. So both things are exactly the same I told you. So let's look at the B part. Now in B part, he made 2012, 13, 14 and 15. In 2014, he's got some trading income, whereas in 2013 he do not have any trading income at all. Likewise, 2014 he got some trading income, and in 2015 as well. Right, then after that it says carry forward loss relief. Now carry forward loss relief is nothing in 2012 because there was no information for the previous years anyway, and for 2013 as well there is nothing. Now if you come down to the at the end of the question, at the end of the page, it tells us the details about the loss. Now the loss was 73,800, which was the loss in the year 2013. Now what we did, we adjusted first against the current year's total income. So in the current year he had only £6,600. Then anything left we set it off against the previous year, which was 2012, and we set off 58,500 in the previous year. Then anything remained we carried forward in the 2014 year, and we set off 8,700 in the next year. Right? Now if we look at the 2016 one, loss was 186,800, and we have used 88,400 in the 9 months period ending on 2015, and we have took 3 months in the previous period as well, which was 2014. Right? Now because we can set off against the previous 12 months, if you remember. First preference is against current period, then the previous 12 months. Now because the previous period was for only 9 months, so that's why we had to take 3 months from the previous year's period, which was in 2014. Alright, so that's why we took the previous year, and the loss unrelieved will be 75,150, and it will be carried forward. Right? I hope you got it, and please make sure you redo this question. And that's it, and I will see you in the next video, and then we will do remaining parts of our corporation tax. All right, thank you very much and goodbye.